Here are the crypto top headlines covered in this video. Altseason is coming, or at least data suggests that it's close. Next, Bitcoin retail interest returns, pushing BTC spot trading volume to 12-month high. Also, only a few Ethereum L2s will survive the next 5 years, says Manta co-founder. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Altseason is coming, or at least data suggests that it's close. Crypto traders and several metrics suggest that an altcoin season is about to begin. Bitcoin price witnessed a sharp correction shortly after hitting a new all-time high at $69,324 on March 5th. Meanwhile, altcoins, led by meme coins and AI-themed cryptocurrencies, have outperformed BTC over the last week, initiating a debate on whether the altcoin season or alt season is here. Total crypto market capitalization hits $2.5 trillion. Bitcoin's brief escapade above $69,000 on March 5th saw the global crypto market value cross $2.5 million mark, although I believe that's supposed to be trillion, so it's $2.5 trillion mark, reflecting the current bullish momentum. At the time of publishing, this figure stands at $2.52 trillion, according to data from CoinMarketCap. Altcoins displayed similar strength, with their total market capitalization, see chart below, rising above $1.1 trillion on the same day. This metric measures the total market value of all crypto assets except Bitcoin. Over the last 3 months, this value has rallied approximately 64% from $697 billion to $1.14 trillion on March 7th. This is a slightly better performance than the 56% posted by Bitcoin over the same period. This ascent attests to growing investor interest in altcoins and the amazing performance recently displayed by this class of crypto assets. Large cap altcoins outperform Bitcoin. The tremendous rally displayed by meme coins and AI over the last week could be a sign that the market is at the start of the alt season. Data from CoinMarketCap shows meme coins posting double and triple digit gains within the last 7 days. In particular, Dogecoin and Shiba Inu posted 20% and 130% gains this week, respectively. Newer tokens such as Pepe, Bonk, and Dog with Hat saw double the triple-digit gains during the same period. Other notable performances came from tokens within the AI ecosystem led by Fetch.ai or FET, Synesis One or SNS, Singularity Net or AGIX, and Theta Network, or Theta, which also produced double to triple digit gains in 7 days. Bitcoin has only risen 8.5% over the same period. It's not alt season yet. The performance of the altcoins seemingly coincides with an improvement in the altcoin season index, indicating that the altcoin season is close. According to this index by Blockchain Center, if 75% of the top 50 coins performed better than Bitcoin over the last season, or 90 days, it is altcoin season. This indicator essentially demonstrates that only 69% of the leading 50 altcoins have outperformed Bitcoin in the past 90 days. Although this index has increased over the last few days, it is still insufficient to declare an altcoin season. However, according to a recent market report by K33 Research, this could change soon, The report noted that Bitcoin's rally toward its new all-time high saw its market cap double relative to the value of all cryptocurrencies except BTC and Ether since the bottom of November 2022. The K33 research analyst said the setup mirrors the 2020 altcoin bull run just before they caught up with Bitcoin's uptrend. Judging by history, altcoins will start outperforming about the time we are now. Independent analyst Credible dives into the connection between Bitcoin's performance at the start of the altcoin season. In a March 4th post in X, Credible outlines two possible scenarios: a mega breakout when Bitcoin breaks its prior all-time high and quickly doubles in a matter of weeks, and alts don't get much love until BTC pauses after this breakout leg, and a consolidation scenario where Bitcoin revisits its prior all-time high but faces rejection or consolidates at the highs for a few weeks. In the latter case, altcoins start rallying almost immediately after BTC tags prior all-time high. Credible says the common theme here and the key takeaway is that after BTC hits prior all-time high, alts begin rallying at the first major pause/consolidation of BTC, whether that at prior all-time high or far above it. However, founder and CEO of MN Trading Consultancy, Michael Vandepoppe, believes that the altcoin season is yet to kick in, pointing out that they still have 40 to 60% market capitalization before it reaches the 2021 highs above $1.1 trillion. On his part, Cardano founder Charles Hoskinson believes that the altcoin season will start once Doge overtakes ADA in market capitalization. In a March 5th post on X, social media platform, Hoskinson said, "That moment Doge flips Cardano, it's officially Altseason, kids." Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin retail interest returns, pushing BTC spot trading volume to 12-month high. Along with the growing retail interest, Bitcoin transfers to Coinbase have also started to surge. Are investors preparing to take profit? Bitcoin spot trading volume across centralized exchanges recorded its best day over the past year on March 5th with a combined daily volume of $46.26 billion, suggesting that more retail investors have started buying the world's first cryptocurrency. Bitcoin spot trading volume reached a yearly high. Following the yearly high, Bitcoin spot trading volume cooled to $31.32 billion on March 6th, with Binance accounting for over 74%, or $18 billion, of the daily volume. People are buying Bitcoin. Spot trading volume has shot up almost 680% since the start of the year, according to a March 6th X post by Malika Kohler, Quantitative Research Associate at Bitwise. The year-to-date record trading volume coincided with a new all-time high in daily inflows for the spot Bitcoin exchange-traded funds. The 10 U.S. spot Bitcoin ETFs set a record $10 billion in daily trading volume on March 5th, beating last week's $7.7 billion record. These are bananas numbers for ETFs under 2 months old, Bloomberg ETF analyst Eric Balchanis said in a March 5th X post reporting the figures. The soaring volumes across exchanges and ETFs propelled Bitcoin price to a new all-time high of above $69,200 on March 5th. Bitcoin was up 1.09% in the 24 hours leading up to 1:30 p.m. UTC to change hands at 66,878 according to CoinMarketCap data. Retail interest appears to also be surging in South Korea, where Bitcoin went as high as $72,000 based on the KRW to USD exchange rate on March 5th on Upbit, the country's biggest cryptocurrency exchange. This price difference is known as the Kimchi Premium or Korea Premium Index, and it has been in an uptrend along with BTC price since early February. Since South Korea has no approved spot Bitcoin ETFs, retail spot buying is likely the main driver of the premium. Number of BTC addresses worth at least $10 at new highs. The number of addresses with at least $10 worth of Bitcoin has reached a new all-time high of over 35 million on March 6th, according to CoinGlass data, suggesting increased retail investor participation. Mirroring the growing retail interest, online search trends for Bitcoin remain elevated. Searches worldwide averaged 80 between March 3rd and March 9th, up over 31% from 61 a year ago when the price was around $20,000, according to Google Trends data. Additionally, the number of Bitcoin transfers to Coinbase, the largest U.S.-based exchange, is rising toward its 2022 highs, as shown in the chart above. This suggests that investors may be positioning themselves for profit-taking at the current price levels. However, previous spikes have not only occurred during bull market tops, as seen in 2016 to 2017. Our next top headline: only a few Ethereum L2s will survive the next 5 years, says Manta co-founder. Manta's Kenny Lai argues that only blockchains with a modular approach stand a chance of survival, but critics say the whole debate is just a marketing stunt. Of the 44 active Ethereum Layer 2 or L2 blockchains in existence today, only a few will still be around in 5 years, says Kenny Lai, co-founder and chief operating officer of Manta Pacific. According to data from L2Beat, there are currently a total of 44 active Ethereum L2 networks, boasting a combined total value locked, or TVL, of $36.92 billion, with Arbitrum standing in first place with 14.5 billion TVL. However, Lai claims the future is only properly paved for modular blockchains such as Manta, Celestia, and Cosmos. Critics of this viewpoint, however, argue the term is simply a marketing stunt, and the success of a network has nothing to do with its approach to development and scalability. Monolithic BTC and ETH killers. Speaking to Cointelegraph, Lai argues the flood of new L2s on the Ethereum network is charting the same path as forks of the Bitcoin and Ethereum networks in the past, none of which survived. With all of the Bitcoin forks, Bitcoin Cash, and BSV, they all took an existing technology and forked it, Lai explained. They said, you know what? We're going to make these minor changes to it, and by making these minor changes to it, we're going to create something that's better than Bitcoin, Lai said, adding, fast forward to 2024, it's just Bitcoin. There's no other Bitcoin fork community that has any comparable metrics, any comparable community that even comes close to the original Bitcoin. Lai added that the same thing played out with Ethereum in 2016 when new networks such as EOS and NEO attempted to position themselves as Ethereum killers by offering alternative Ethereum virtual machine and VM environments that tried to make slight tweaks to the pre-existing Ethereum ecosystem. In Lai's view, The central issue with all of the Bitcoin and Ethereum forks was that they were all built monolithically, meaning that they didn't allow for the quick integration and adoption of new technology that showed up as time went on. They all built monolithically, and what happened to them, right? Fast forward again to 2024, Ethereum is the dominant player, Lai said. Will we see this many L2s in 5 years or so? I don't think so. Only a few will survive. Modular blockchains are networks that export their primary tasks, execution, settlement, consensus, and data availability to external blockchains, which proponents say offer greater design flexibility. In contrast, monolithic blockchains prioritize a single system architecture which handles all tasks within a single layer of the network. Some, however, don't see any reason to debate modular versus monolithic at all. Maybe it's all a marketing stunt. Austin Federa, head of strategy at the Solana Foundation, described the relatively new debate around the two terms as a marketing stunt introduced by Celestia. While many understand Ethereum's more modular architecture, relying on L2s to complete specific tasks, as standing in direct contrast to the monolithic nature of other higher throughput networks such as Solana or Avalanche, Federa disagrees with the use of the term entirely. We have to remember that the modular versus monolithic debate is all a marketing stunt, said Federa. Celestia created this distinction between modular and monolithic. It's not a natural distinction, and there's nothing organic about it. Lai claims that Manta, launched on January 18th, could be described as the first and largest modular Layer 2 network on Ethereum, as it uses Optimism's OP stack and utilizes Celestia for data availability, though Ethereum co-founder Vitalik Buterin would say that makes it a Validium and not a genuine L2. At the time of publication, Manta is the fourth largest L2 network in terms of TVL, only recently overtaken by the new L2 Blast, which launched its mainnet on March 1st. We don't build in a monolithic way. We haven't built anything in terms of core architecture just by ourselves, Lai explained. We're taking a very modular approach, which means that we're able to essentially plug and play different technologies that are available at different times so we can continue to adopt the changing demands, Lai added. Federa, however, argues that there's no need to make a distinction between the two approaches. The truth is, there is no such thing as a modular system, and there's no such thing as a monolithic system. Federa explained that a monolithic network is simply an integrated blockchain where tasks are handled in a single layer, whereas modular or fragmented networks complete the same functions across several layers and don't actually contribute considerably to the success or outcomes of a given network. It's like how the terms of pro-life and pro-choice are two positive spins on something, right? Like no one is actually anti-life or anti-choice, right? This is all just marketing terminology to put forward a certain narrative that people want to talk about. I think that setting up these things as being at odds with one another is not a particularly useful or accurate way to think about these systems. They're just different software architecture choices that are not actually that different at the end of the day, Federa said. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.